Hello, trading is closed on January 6, 2016. We had a MEJT target for today of 2011.10. Obviously that printed early. There was also a 3-month-old MEJT target of 1985.65, and that printed also. Early in the day we hit a low of 1986.02. It's pretty close to the target, but it's not close enough to be within the tolerance. However, the target was hit later on. It's interesting how even though this price is 3 months old, the market remembered it as a support level. That means there are now only 3 days since the middle of April 2014 which have failed targets. Now, having a failed target at the high at a major change in trend is part of the system. That applies to these targets I don't want to see print, and to these targets right at the high. The one failure since April 2014 is this 2054.59 print from New Year's Eve. I really would like to see it print, but I don't always get everything I want. During the day, MEJT said ultimately higher prices would print. They did here. We usually get more than the minimum. We got a bit more than that. Frankly, we usually get a bit more than this too, but we don't have to. Note how we stopped right at a well-defined MEJT resistance level from earlier in the day. I don't have any new MEJT signals, so I have to rely on other things. The long-term pattern targets 1839 and change. If that's the end of wave 1 and we have an ABC for wave 2 up, we should go there pretty much in a straight line drop. However, one of my trading rules is that if you have a slanting trend line and you break through in straight line fashion, you should return to the trend line at some time. So even though futures are down sharply as I'm recording this, I would prefer it if that's A and that's B, and we have a wave C up touching this line. If we hit the 2054 plus target and stopped at this line, as I think we're going to, it would take us probably till the end of the month to get there. Well, that's what I'd like, but I'd like some more evidence than that. Trying to catch a falling knife like this can be a pretty dangerous thing. There is some evidence that we have hit support here, but it won't be convincing until we see tomorrow's action. In the last 3 days, we've had 2 sharp down moves, huge gaps at the open, despite gapping down like that twice and hitting lower lows. We've been unable to close under any one of these initial drops. That's positive action and generally leads to higher prices unless we promptly take out this low. It's analogous to the Trader Vic 2B signal. You can recall at the top, if you have a new high, it's reversed immediately that you sell as the old highs undercut with a stop over the high of the bar, which undercut the old high, which overtook the old high. Same thing works in reverse. At the bottom, you have a low, you undercut the low, you reverse it immediately, you purchase as the old lows recovered with a stop under the low of this bar. Now, this failed eventually, but if you followed the rules, you got in at 1989.68, got as high as 2002 64. So if you're a day trader, you certainly could have made money. Right now, here's the low. We broke through it and reversed immediately. The bar that broke through it's here. If we undercut this low, 1979.48, that's the stop. On a daily chart, the bar which undercut it would be this one, which is the low of the day. There is some more evidence. It isn't totally convincing to me. Here's your Andrews pitchfork. We're playing with support on the middle tine. Support doesn't have to hold. Here's a TDST line on the daily chart. There is support at and slightly under the line, so we're kind of at a support level here. When you drop right through a support level without breaking through or gapping down under this low tomorrow, usually it'll hold. We're getting close to DeMarc buy signals on the 30-minute chart. Bar 13 gives a combo in green and sequential in blue buy signal. So even if we drop a bit, we'll get some buy signals from that. It's possible to calculate the target here. Here's a stilt, here's a stilt. This is a diamond. You can take the height of the diamond in 38.2, 50, and 61.8. And if you take the 50, I guess, which isn't the most common one, you'll identify the high here. That's a diamond. This is a V pattern. Remember, half of the diamond's all you need. Take the height of the diamond. Here's your 50, and that's the target. Now this A pattern, here's a stilt, here's a stilt, here's your A pattern. If you take this one here, this is 61.8, you come awfully close. It's also possible to use this stilt, that A pattern's a big half a diamond. You can take the high of the diamond, here's the height, right there. You'll see the perfect touch right here. This is 38.2, that's 61.8. This level gets revisited here as perfect resistance and gives us a target right here. Well, we overcut it slightly, but it's possible. Futures are continuing to plummet as I'm recording this. What happens in overnight doesn't really count. I've seen stranger things happen. If we recover, and particularly if we gap up tomorrow, it's possible this will hold and we can have a good rally to the trend line I talked about here. But if that doesn't happen and this counts correct, we could be in a straight line down to 1839 plus. So for that reason, I think early action tomorrow is going to be critical. Gapping under this will trigger some DeMarc buy signals, but I still think it's big trouble. I can be wrong if that drop is reversed instantly. And the ideal situation, unlikely as it seems now, is for us to move up sharply at the open. If that were to happen, this low could hold. That's today's call.